British American Tobacco, one of the largest tobacco companies worldwide, has seen solid financial performance in 2023 so far. The company's revenue decreased by only 1%, indicating a slight downtrend in sales, but their net income grew by over 100% compared to the last year's first half. Even with this financial performance, the stock is down by 12.5% year to date and down over 50% from its peak. Today, we will be taking a three-step approach to thoroughly evaluate British American Tobacco and determine its fair value. Step 1. Margin of safety. In this step, we'll look at BAT's key metrics and ratios to determine if we should be more or less cautious when determining a fair value. Here, we'll delve into BAT's financial statements and assess critical metrics and ratios. In step 3, we will be using a combination of valuation models such as discounted cash flow and discounted dividend to gain an insight into the value of BAT's business. By using these models, we can determine whether the stock is currently overvalued or undervalued in the current market based on different metrics. In conclusion, by combining the findings from the three steps, we'll ultimately determine the fair value of British American Tobacco as an investment opportunity. To determine the final valuation of the stock, we'll be using a margin of safety. This margin of safety will be based on the financial ratios, the financial health, and the growth of the company. And we'll be using a standard margin of safety of 25% that can never go below 0%. The margin of safety can either increase or decrease based on the ratios that we're going to look at in just a moment. And the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in a scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, bright green will mean a 10% deduction from a margin of safety. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction. First metrics that we'll be looking at are the margin and EBIT growth. The EBIT has gone up over the years, going from almost $6.5 billion in 2016 to over $14 billion in 2022. The average EBIT growth during this period has been sitting at 15%, which is a 5% deduction from our margin of safety. If we then look at the margin, it has also gone up, going from 37% in 2016 to 42% in 2022. The average margin growth then is 2.2%, which is in the green part of our scale, indicating another 5% deduction in the margin of safety. The next metrics that we'll be looking at are the dividend growth and the payout ratio. The dividends have been somewhat inconsistent, but have gone up over the years, going from $2.31 in 2014 to $2.85 a share in 2023. The main reason for the inconsistency in dividend payments is because the dividends are paid in British pounds rather than dollars. With this, the dividend growth is sitting at 5.2%, which is no change in the margin of safety. And this dividend is supported by a payout ratio that is currently sitting at just 61%, which is once again no change in the margin of safety in this metric. The final two ratios that we'll be looking at are the debt to EBITDA return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it, and divide it by the EBITDA. Out of this, we get the amount of years of EBITDA it takes for the company to pay off all of their debt. And for BTI, this is just under 3 years, in this case a 269% debt to EBITDA ratio, which is just under the red part of our scale, indicating no change in the margin of safety. The return on invested capital for BTI is sitting at a solid 9.5%, indicating that the management is somewhat effective at allocating capital, but it doesn't award it the 5% deduction in the margin of safety just yet though, so no change in the margin of safety in this metric. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow of BTI going from 2013 to 2022. The average growth rate in the annual free cash flow has been sitting at 14.18%, but I'm expecting a decline in their future annual free cash flow of 2% for the next 10 years. With this percentage, we'll determine the future free cash flow for BTI and determine a terminal year of valuation, using a perpetual growth rate of 3% and a discount rate of 8.5%. This gives us a sum of free cash flow of $153.1 billion. And to get to our equity value, we have to add the cash and equivalents and subtract the debt, giving us an equity value of $114 billion. And dividing this by the amount of shares outstanding, we get a discounted cash flow price per share of $50.91. And with the current price of $33.42, this is an upside of over 52%. The second model that we'll be using is the dividend discount model. I've imported dividend payments of BTI going from 4 years ago to the current year. The average growth rate in their dividends annually during this period has been sitting at 1.72%, and projecting their future dividend growth to be 1.5% in all of their future dividends. And we'll once again be using a discount rate of 8.5% in this valuation, giving us a dividend discount model price per share of $41.33, which is an upside of over 23%. The next model we'll be using is Graham's revised valuation formula. In this model, we'll be looking at the earnings per share that BTI is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds in relation to the average yield of AAA corporate bonds that is always sitting at 4.4. We go by the theory of Benjamin Graham that a PE of a company with no growth should never exceed 7. And looking at all of these metrics, we get a fair value of $32.31 out of this model, which is a downside of 3.3% out of this model. The fourth model that we'll be using is the multiple valuation. In this model, we take a look at similar companies to BTI, take a look at their stock price and their earnings per share. This way, we can determine the average PE multiple in the industry, which in this case is sitting at 11.04. All that's left to do then to get our fair value is to multiply by the earnings per share that BTI is generating, which is $4.82 a share, giving us a fair value of $53.22, which is an upside of over 59%. And the last model that we'll be using is the mean reversion theory. The mean reversion theory, we go by the theory that a company will always trade above or below its mean, and the metrics that we use to determine this are the dividend yield and the PE ratio. In this case, I've imported the dividend yield of the past 5 years, and on average it has been sitting at 7.42%, while the current yield is sitting at 8.45%, indicating that's undervalued on this metric. Doing the same with the PE ratio, on average in the past 5 years the PE ratio has been sitting at just under 11, while the current PE ratio is sitting at only 6.94, indicating that's once again undervalued by this metric as well. And looking then at our fair value of $45.49, we get an upside out of this model of over 36%. Let's go look at the final overview of our valuation next. Looking at our final overview, we've imported discounted cash flow, discounted dividend, Graham's valuation, multiple valuation, and a mean reversion theory price per share, giving us an average of $44.65. Margin of safety we've determined earlier using a standard margin of safety of 25%, deducting by 5% for the EBIT growth and 5% for the margin growth, leaving us with a 15% margin of safety. Applying this margin of safety, we get a fair value of $38.83, and with the current price of $33.42, that leaves us with an upside of over 16%, indicating that's currently a buy rating by our valuation. If you want to get access to all of the valuation models that I use in my videos and much more, you can check in the description for my Patreon link. And if there's any other companies that you would like to see me cover on this channel, please let me know in the comments. Thanks for watching.